Ladies and gentlemen, the more I look at these charts, the more I'm reminded of a period of price action we saw last year. As you can see where I'm circling right now, that is the pattern that Bitcoin is potentially copying. And as you can see, after we completed that pattern, we skyrocketed right to the upside. Will that be happening again? That is a question I'm going to be asking today. We're also going to be looking into, of course, recapping what we discussed yesterday, which is, where does Bitcoin need to close to remain in a good position? What does Bitcoin need to maintain to remain in a good position? Because right now, regardless of whether we're bullish or bearish or whatever we are under threat. There is a degree of concern in the market right now. We're testing very, very important macro levels that fundamentally need to hold, okay? So we've got a pattern to look at. We've got some things to look at on the macro and even on the short term as well, giving you an update of how Bitcoin's going in this price region. So quite a diverse range of topics here today. I'll try and keep it as brief as possible, guys. Let's get into it. Without further ado, actually I shouldn't say that because we want to look at one thing before we do, okay? It's going to take 30 seconds here. Bitfinex and the BingX exchanges. The two exchanges I'm advertising currently on this YouTube channel, okay? Both are non-KYC and both are global. You can sign up to either of these exchanges from anywhere in the world, okay? With BingX, you will sometimes require a VPN, and with Bitfinex, you will never require a VPN. So these are very accessible exchanges. They're both extremely low in trading fees, and they've both never been hacked before. And with my referral link down in the description and the pinned comment, you can click on that referral link. You can sign up to the exchange with that link, and with that link, you'll get a 15% trading fee discount for life, okay? So forever on that exchange if you sign up simply with my link. So go ahead and do that. It helps the channel and it helps you by getting that discount. So check it out. All right, so let's get into it. We're going to start off with the macro here because this is without a doubt the most important thing you need to know right now, okay? Bitcoin, let's just give you a basis for what's going on here. The 61K level in green on the screen here is something I've discussed for months on end. It's something I have never, ever deterred from. I'm not going to spend too long here. This is recapping from yesterday, but the 61K level is absolutely critical. It is the bottom of this price range, plain and simple. We've seen deviations below it. We've seen 57K, which was a deviation to retest some of the weekly chart levels, such as the bull market support band. But for the most part, on the macro scale, 61K is the bottom of this price range on Bitcoin. It is the level that's holding up Bitcoin. And fundamentally, it is a monthly chart level. If we go to the monthly chart, we draw a yellow line from the all-time high on the monthly candle closes in 2021. We draw it across and we see that 61K line, it's sitting at 61K, has acted as major level of confluence, okay? Seeing rejections, the highest of a monthly candle close in 2021, seeing a rejection here, opening on it right here, coming back down, flipping it for support, opening on it again, coming back down, and currently we're testing it for support once again, right? So this is a major zone of confluence in the monthly chart, and hence it is a monthly chart level. So what am I saying? I'm saying to you that the 61K region, which defines the bottom of this price range, which is the fundamental level that Bitcoin needs to hold in order to remain macro bullish, is actually a monthly chart level, okay? Therefore, if it's going to break to the downside, it will need to break to the downside on the monthly chart, which means we need to be waiting for the monthly candle, okay? So what do we need to be seeing on the monthly candle? We need to be seeing Bitcoin remain above 61K on the monthly candle close in order to maintain the macro level and not break down. If we see a monthly candle close below 61K, we are in trouble for Bitcoin. And not only for Bitcoin, but for the broader markets as well, because obviously Bitcoin controls the broader markets. Now, luckily for us, we are in a situation where we have more clarity than that because we have the weekly chart as well. And the weekly candle is closing at the exact same time as the monthly candle is closing. And the weekly candle has a couple of levels to monitor as well. Those are the bull market support band as well as the pi cycle center lines. And guess what? They're both sitting currently at 61K as well. So basically what I'm saying to you is this. If we close the monthly candle below 61K, not only do we trigger a monthly chart breakdown, not only do we trigger a weekly chart breakdown, but we also trigger a range-based breakdown. We see a triple trifecta breakdown that's going to absolutely decimate the bullishness in the market. So we need to be seeing it absolutely paramount that we see a monthly candle close and a weekly candle close. They're happening at the same time in 5 days above the 61K level. Now, as for the meantime, as for the short term's not really too much of a concern. We've seen deviations below 61K before. Again, this is a monthly chart level, so we can see short-term deviations below it. We've seen it like 6 times now. In fact, let's count how many times we've seen it. We've seen it 1, 2, 3, 4, 5, 6, 7. This is the 8th time we've seen it, so it's not abnormal at all. Us being below 61k temporarily is not an abnormal thing at all. It's very, very normal actually in this price region. It's not something to be concerned about. The only thing that would concern me is actually closing below it or dropping below 57k in the meantime, which would be a break of that low and entering lower lows. That would be a big threat. But right now, I think that this macro range is still intact. And I think, again, we need to be focusing most of them at monthly close. What about the short term? Well, we can look at the short-term charts. We can see that Bitcoin is just reacting quite normally here in the short term. It's got a massive little cup formation here, potential head and shoulders pattern. Failed to kind of break out of the neckline though. Ultimately, we're fighting the 61k level for resistance right now. We're also fighting the Pi Cycle Center line, which is the second green line on the screen here. We're ultimately just undecided at the moment on the very short-term charts. We could be forming some sort of ascending triangle formation, which would be very good if we did that, if we broke upwards here. Obviously, the sooner we get over 61k, the less we have to stress about it later in the week as we get closer to the monthly candle closes. But right now, it's not necessarily too important what happens here in the short term. We just need to remain over 61k for the monthly close in 5 days. But, you know, again, it won't hurt to get above it sooner rather than later. So we'll give you an update on that structure tomorrow when there's more progression in the price charts. Now, what's important to note as well, and what's slightly reassuring here, is that we've got the altcoin market cap on the screen here. So this is the total 3 cryptocurrency market cap. It measures the US dollar value of every single altcoin in the cryptocurrency market. Now, this chart, unfortunately, has broken down from a few key critical levels, such as bull market support band and Pi Cycle Center lines, but it is actually holding at the moment an ascending support line in blue that stems back from November, as well as a horizontal zone of support that I've just made a rectangle around. So I don't consider this chart broken down yet. And if we actually zoom in here, we see something quite reassuring. We see that while Bitcoin on the hourly chart, if we go to Bitcoin on the hourly chart, for example, we can see the Bitcoin on the hourly chart, as of recent, the last 24 to 48 hours, was struggling with severely bearish price action. We were dropping downwards very, very steeply. What's reassuring is that the total 3, the altcoin market cap chart, was finding major support during that period of time, and Bitcoin dominance was dropping massively. So basically, this was a, let me just explain it in these terms. Bitcoin was dropping, but because the altcoin market had massive support, Bitcoin wasn't actually dragging down altcoins. Instead, Bitcoin dominance was dropping with Bitcoin. So altcoins were maintaining their ground while Bitcoin alone was dropping massively. And this is representative of the fact that the altcoin market cap has major support here. So it kind of validates us looking at this ascending blue line and this horizontal price region as support. The fact that Bitcoin dominance dropped so massively on a Bitcoin crash means that this is, in fact, a very important region for the total 3. And it also means that if the market is going to bottom, it's going to be very, very soon, because that's very abnormal to see that. You don't really ever see Bitcoin dominance crashing down a full 1.5% while Bitcoin is actively crashing. Altcoins never hold up that well. So this is actually slightly reassuring to a certain extent. So that's good to see. It means that you know, the market is recognizing that altcoins are on major support here, and the market is literally recognizing that altcoins can't really go much lower while remaining healthy. Now, obviously, they can go lower while turning unhealthy, but that would constitute macro breakdowns, in which case we'd get the hell out of the market. But right now, for the most part, it validates that this 61k level for Bitcoin and this broader price region where we are testing right now in the broader markets is going to be the last healthy place for a bottom, because we're seeing abnormalities in how Bitcoin dominance is moving around this price region. The market is literally telling us, hey guys, I'm acting abnormal here because this region's important. That's what the market's doing. So this region is undoubtedly important, and that's why I'm so focused and so concerned on the incoming monthly and weekly candle closes. But here's the part you've been waiting for, okay? And here's the title of the video. I hope not to underwhelm you here. Fractals are never really reliable forms of TA, but there is an argument to be made, given the context that I just gave you, that this level at, between 57 and 61k is the last healthy, keyword healthy, macro bottom on Bitcoin. There's an argument to be made that we're copying the same structure that we formed right here. You'll remember it very, very well. Between March and October last year, we formed a massive sideways structure. It lasted a long period of time, around 7 months of sideways. And what you'll notice about this sideways structure is that it happened in kind of like a very basic horizontal channel formation. So you had the top level of resistance, you had the bottom level of support, and you saw basically Bitcoin going from, okay, this is very, very important to note. Bitcoin going from, there's actually a lot of similarities here, really. Bitcoin going from a rounding bottom formation into a rounding top formation, finding the bottom of that rounding top, entering the horizontal channel, immediately testing the top of the channel, bouncing to the bottom, bouncing to the top, bouncing to the bottom again in what looks like a double top formation while everyone is screaming the market's going to go down. We find the macro support and we breach the horizontal channel. We are seeing such a similar structure here. I really cannot deny how similar the structure is. Again, we have a horizontal channel. I mean, on every single level, this structure is very similar. Horizontal channel, as you can see, horizontal level forming the base, horizontal level forming the top of it. Let's just draw it roughly. We had a rounding bottom formation. Okay, we then had a we can even draw the rounding bottom formation from here, or you can draw it from here. It doesn't really matter where you draw it, but we had a rounding bottom formation, followed by a rounding top formation, followed by an impulse up into the channel and immediately to the upper resistance level, down to the bottom of the channel, up to the top again, forming a double top formation. Everyone's flipping bearish, but instead, if we are going to copy that fractal, we will go upwards from here and breach the top of the horizontal channel. Now, with that being said, if we are going to follow the fractal, it can take a little period of time. I mean, from the retest of the bottom of the channel, from when it first started to breaking the top of the channel, it took about 2 months, okay? And there was about a month of sideways price action there. So don't expect this to be an immediate bottom if we are going to follow this fractal fully. But fractals aren't exact, so we can't exactly, perfectly measure what the time frame is going to be. But the point is, I mean, you'd be simply either blind or lying if you didn't see the similarities here. There are such big similarities between this region right here and this region right here, and those similarities do suggest that this will be the bottom, and we will impulse to the upside here. Now, with that being said, fractals are the least reliable form of TA, and that's why the good news is we don't even need to really rely on it. It's just something interesting to look at. What we need to rely on more than just a fractal is, again, going back to the start of the video, the monthly candle and the weekly candle closes coming up in 5 days, and also just looking in to that 61K level, looking to see whether it's flipped for support in the short term in the meantime. So a couple of things to look at there, guys. I thought it was an interesting video, and I certainly think that fractal's interesting. Again, for me personally, I don't trust fractals that much. They do play out, they do work certainly to a certain extent, but fractals are very kind of speculative TA. Structures don't always copy each other exactly, but right now, I mean, the similarities are undeniable, to be quite frank with you. So let's see if it plays out. If I had to guess, I would say it probably would. If I had to guess, I would say the market is probably bottomed here. And I don't mean that on a short-term basis. We could wick down on short-term. I'm talking about on a more broad basis. I think this vague region between 57K and 61K is probably the market bottom. And the reason I'm willing to say that is because that is what all the macro trends historically have indicated. And if we are to break down from that region, that is something that is unpredictable. For me personally, I cannot predict that is going to occur because nothing like that has happened before at this phase in the cycle, okay? So it's a situation of the trend is your friend until it ends. But again, I'm not saying that you should buy here necessarily. Just because this is a macro support zone doesn't mean you should buy. You can take the approach of waiting until there is a validation back to the upside, waiting until we break above 67K. We flip that level for support. We actually validate going back up again. You don't have to buy here just because the macro says so. You can buy when the validation has actually occurred. It depends on your risk tolerance, guys. You can also buy here and just sell if we drop below the validation zones. I've always said, and I will continue to say, this cycle will be much more of a reactive cycle than a predictive cycle. There's a reason why I'm very cautious about making predictions. I'm not necessarily sitting here saying, oh, we're going to bottom here 100%, because I believe we have seen deviations in this cycle, and I don't think it's irrational to think that deviations could continue to occur. And that's why I'm not all on the predictive bandwagon where I'm predicting things left, right, and center. I'm giving you the situation, the outline, I'm giving you what needs to happen, and I'm giving you strategies you can take to actually ensure profitability, regardless of the predictive statements, which I think are useless at the end of the day. You don't make money by saying words. You make money by clicking buying and sell. That's the fundamental reality. So again, the monthly chart and weekly chart are very important. We are potentially following a fractal from last year. If we are, that is very good news. So let's wait and see. Guys, thank you for watching. I hope you enjoyed. Again, go ahead and check out the BingX and Bit2Nix exchanges. Very low in trading fees, never been hacked before. My referral links down below will give you even lower trading fees on those exchanges. It's a no-brainer. Go ahead and click the link down below. It helps out the channel massively and helps you by getting on a good exchange that you can trust that is very cheap in fees. We've also got the VIP group on Telegram, guys. We trade altcoins 4 to 5 times a week. We also have a group chat. So you're getting access to altcoin trading signals and a group chat where you can discuss the market 24/7 in the VIP group. So check it out if you're interested in that. We've then got, finally, the Crypto Academy's Become a Trader 10-unit course bull market sale. For a limited time, you're getting a discounted price on TA education, learning how to trade. If you want to learn how to trade, you want to take advantage of the market environment currently, you're going to need to know how to do TA, and you can learn how to do so on that course. So check it out. Guys, thanks for watching. Hope you enjoyed. Leave a like, comment, subscribe, and I'll catch you tomorrow. Cheers.